I sat in a congressional hearing, surrounded by the stale scent of old paper and a quiet, almost suffocating desperation that seemed to hang in the air. The hearing was supposed to be about banking regulations, a chance for accountability, but what I witnessed was something else entirely. A display of real, unspoken power, the kind that rarely makes headlines. Not the kind of power you see dramatized on TV or in movies. This was the subtle, insidious power that quietly shapes the rules, then turns around and applauds itself for following them, as if the game wasn't already rigged. Lawmakers, who are supposed to represent the interests of ordinary people, seemed to defer to the bankers, who spoke in dense jargon, masking their dominance behind technical language and polite smiles. The message was clear, even if unspoken. We are the system. We are too big to fail. When we lose, you pay the price. The questions tossed at them were softballs, the answers sounded rehearsed, and the real issues, the ones that matter most, were carefully sidestepped or ignored altogether. No one dared to challenge why these banks, propped up by government guarantees and taxpayer money, act like sovereign nations unto themselves, immune to consequences. The real power in this country isn't exercised at the ballot box or in public debates, it's wielded in rooms like this, by people you didn't elect and can't fire, behind doors that remain firmly closed to the public. These are the people who influence your mortgage rate, your job prospects, and even which businesses in your neighborhood survive or disappear, and they do it all with a practiced smile, fully aware that the game is rigged in their favor, and that most of us will never even know the rules. This wasn't just about money changing hands, it was about control over lives, over—
Chairman, Mr. Otting, can we agree that banks enjoy numerous advantages vis-a-vis non-bank competitors as a result of government actions?
Yes, we can.
For example, I could start a competitor to YouTube tomorrow. But if I want to start a bank, I have to get a charter, do I not?
That is correct.
So that limits existing banks' competition. Can we agree on that?
We can.
Okay. Banks can lend nationwide, can they not?
If they, depending upon their charter and where they're legally chartered to operate, that's correct.
Right, but government has given them the privilege of lending nationwide, am I correct? So long as they comply with the necessary rules?
And depending on what charter they have, correct.
Right, okay. A non-bank like Prosper or Lending Club, they have to get a license from every single state, don't they?
Yes, they do.
What about transferring money? Banks can transfer money across state lines, but non-bank—
This wasn't just about money changing hands, it was about control over lives, over futures, over the very fabric of society. The whole charade was a stark reminder. The real decisions, the ones that shape our world, happen behind closed doors, far from public scrutiny. In this performance, we're just props. Silent, watching, and largely powerless to change the script. And the stakes, though hidden from view, are higher than most of us ever realize, affecting not just our wallets, but our very way of life. Banks aren't like your local pizza shop. While your neighborhood pizza place lives and dies by its customers, banks operate in a completely different universe. If a big bank fails, it's treated as a national crisis. The news flashes, markets tremble, and suddenly everyone's worried about the entire economy. Why? Because banks have a golden ticket: access to the Federal Reserve's money and FDIC insurance. These aren't just perks, they're lifelines that most businesses can only dream of. This isn't a free market, it's a club with a government safety net. Regular businesses fear failure, big banks don't. They play by a different set of rules, protected from the consequences that others face. They know Uncle Sam will bail them out if things go south. It's an unspoken promise that's been proven time and again. That's not capitalism. It's a rigged game where the house always wins, and you pay for their losses. When banks stumble, taxpayers pick up the tab, not the bankers. This government backstop lets banks borrow cheaply and take bigger risks, knowing the public covers the downside. It encourages reckless behavior because the safety net is always there. Profits are private, but risks are public. When times are good, bankers celebrate. When times are bad, the public shoulders the burden. Imagine betting your life savings, keeping the winnings, but making your neighbor pay if you lose. That's the deal banks get, and it's a deal no one else enjoys. That's the privilege banks enjoy. They operate with a confidence that comes from knowing they're too important to fail. Their skyscrapers aren't just symbols of success, they're monuments to government guarantees. Each one stands as a reminder of the special treatment banks receive. Their power isn't just earned, it's granted by those meant to regulate them. The lines between regulator and regulated blur, making real accountability rare. They're not just players, they're the house. The odds are stacked in their favor and the game is designed so they rarely lose. And the house always wins, especially when the dealer is on their side. The system is built to protect them, not you. This is the reality behind the polished facades. The marble floors and grand entrances hide a system tilted in their favor. And it's why the system feels so unbreakable. The banks aren't just part of the system, they are the system, and changing that is no small feat. Remember 2008? The year the world watched in disbelief as the financial system teetered on the edge of collapse. The banks gambled recklessly with risky mortgages, packaging bad loans and selling them as gold. When the house of cards fell, it crashed the economy and triggered the biggest bailout in history. Hundreds of billions in taxpayer dollars, your money, were funneled to save these institutions, with the government stepping in as the ultimate safety net. The excuse? They were too big to fail. We were told that letting them collapse would have wrecked the entire financial system, causing even more pain for ordinary people. Maybe that's true, but the real message was clear. There are no consequences for the powerful. The rules don't apply at the top. While millions of families lost their homes and jobs, the bankers who caused...
What about transferring money? Banks can transfer money across state lines, but non-bank competitors have to get state licenses, do they not?
Are you saying where a bank has locations in multiple states?
Yeah.
Yes, they can.
Okay.
And non-banks usually will use a financial institution to accomplish that.
How about federal deposit insurance? Does that give a bank a competitive advantage over a non-bank competitor like a money market mutual fund?
Up to a certain level it does, at the maximums of the FDIC levels. It gives people confidence that the U.S. government stands behind those deposits.
Okay. In 2008 and 2009, the American taxpayer bailed out some of our larger financial institutions under TARP. You, of course, remember that.
I do.
Do you think all those financial institutions would have survived had the American taxpayer not stepped up to the plate and bailed them out?
I can't speculate on that because I think it was a very important thing in the eyes of Americans that the banking industry was stable.
Of course.
And that there was capital there to ensure that those financial institutions would be available to support their needs.
Well, for example, under TARP and federal loan guarantees, Citigroup got $475 billion from the American taxpayer. Bank of America got $336 billion in dollars and guarantees. Without those guarantees and loans from the American taxpayer, would they have made it?
I did not do that analysis. I'm assuming if you want me to offer a general opinion, I think it could have been questionable.
Okay. Well, when a bank uses government-provided market power to force social change, can we agree that that bank is effectively acting as a private regulator?
Could you repeat that question for me? When a bank is
Yes,
using...
banks have competitive advantages as a result of government.
That's correct.
When they use that government-provided market power to implement their version of appropriate social change, they're in effect acting as a private regulator, are they not?
I don't know if I would say a private regulator. I think that they are deploying the management and the board's decision on markets that they wish to serve.
Okay, or not serve.
Or not serve.
All right, I'm going to be introducing a bill called the No Red and Blue Banks Act that's going to block the GSA from awarding contracts to banks that discriminate against lawful companies based solely on social policy considerations. I'd sure like you to take a close look at it.
I would be happy.
In the 30 seconds I have left, let me ask you this question. I just read an article where Bank of America was fined $30 million.
While millions of families lost their homes and jobs, the bankers who caused the mess walked away with bonuses and golden parachutes. It was the greatest transfer of public wealth to private hands we've ever seen, an unprecedented shift of resources from Main Street to Wall Street. The bailout didn't fix the system, it cemented the idea that some corporations are simply above the rules, untouchable no matter what they do. For most people, failure is devastating and life-changing. For megabanks, it's just a temporary setback before the next government rescue. This creates a dangerous moral hazard. Why be careful or responsible if you know you'll always be saved, no matter how big your mistakes? It's like giving a teenager a limitless credit card, telling them to spend whatever they want, and promising to pay the bill no matter what. Fast forward to today, the banks are even bigger, the same executives are still in charge, and the system remains largely unchanged. The bailout was just a patch, not a real solution. The cracks in the system are still there, just papered over. When the chips were down, the government picked a side, and it wasn't yours. The voices of ordinary people were drowned out by the power of money. The heist was successful, and they didn't even need masks or to sneak in at night. It happened in broad daylight. The lesson? In this game, the public always pays. The risks are private, but the losses are socialized, and the cycle continues. Banks have government-granted power, but what happens when they use it to enforce a social or political agenda? Operation Choke Point showed us. Regulators pressured banks to cut off services to legal businesses they didn't like. Your ability to run a business could be ended by a quiet decision between a regulator and a bank executive. Suddenly, banks aren't just storing your money, they're gatekeepers, moral arbiters, and enforcers. This bypasses democracy, letting banks and regulators decide who gets to participate in the economy. The targets? Often legal but controversial industries. Instead of public debate, the government leans on banks to do its dirty work. Banks, eager to please, comply, becoming enforcers of an unwritten code. Banking shifts from financial risk to political risk. That's a dangerous road for any society. The fight over gun rights is a perfect example. Legally licensed gun businesses are denied banking services, not by law, but by corporate policy. Major banks, under pressure, have cut off financing and payment processing to gun stores. This isn't a free market, it's a backdoor ban, enforced by a handful of executives. They claim it's just business, but these banks exist because of government support. With that privilege comes responsibility to serve all legal businesses. Denying services based on politics is an abuse of power. If they can do it to gun stores, who's next? The precedent is set. It's corporate censorship, enforced by the power of the purse. When banks get caught breaking the rules, do they face real justice? Hardly. Billion-dollar fines sound huge, but for banks, they're just a cost of doing business. Wells Fargo created millions of fake accounts. The result? Fines, no jail time, and golden parachutes for executives. The message: crime pays if you're big enough. This repeats endlessly. Money laundering, market rigging, defrauding customers. Each time, banks pay a fine, admit no wrongdoing, and move on. The fines are like parking tickets. Annoying, but not a deterrent. Real accountability would mean jail time and breaking up repeat offenders. But that never happens. Instead, we get headlines and little change. There are two systems of justice. One for you, and a much friendlier one for them. The illusion of punishment keeps the system intact. And the cycle continues. The system runs on illusions: oversight, regulation, justice. Regulators often become bank executives, blurring the line between watchdog and partner. Fines are negotiated in secret, with no admission of guilt, letting banks dodge lawsuits. If you rob a store, you go to jail. If you steal billions as a CEO, you get a bonus. The bigger the crime, the lighter the punishment. This breeds cynicism and erodes faith in the system. People see the rules don't apply to everyone. The illusion of justice is more damaging than none at all. It's a lie we're forced to live with. Why care about a boring hearing in Washington? Because this is about freedom, fairness, and the kind of country we live in. When banks, protected by government, decide which legal businesses survive, we lose a piece of our liberty. It's a
In the 30 seconds I have left, let me ask you this question. I just read an article where Bank of America was fined $30 million for manipulating a benchmark for interest rate products. They did it over 6 years to enhance or to make money on their own derivatives positions. They were fined $30 million. Their total assets are $2.3 trillion. You think that's really going to stop them?
A fine is one aspect to the regulatory oversight. In addition to a fine, usually there are, critical factors around consent orders and various policies that are required to be adapted by the financial institution. So I don't think a fine solely will dictate, whether the bank will not be involved in that activity going forward.
If you did that, you'd have U.S. attorneys hanging all over your neck, wouldn't you?
Probably.
Thank you, Mr. Chairman.
Thank you.
Why care about a boring hearing in Washington? Because this is about freedom, fairness, and the kind of country we live in. When banks, protected by government, decide which legal businesses survive, we lose a piece of our liberty. It's a quiet tyranny, but tyranny all the same. Their power affects your job, your loans, your rights. The ability to do lawful business is threatened, not by law, but by corporate policy. This fusion of state and corporate power should alarm everyone. Today, it's one industry. Tomorrow, it could be you. We can't accept this as normal. Real accountability means ending too big to fail, jailing executives for fraud, and protecting fair access to banking. It means closing the revolving door between Wall Street and Washington. You have a voice. Use it. Demand change, support reform, and refuse to be silent. The stakes are too